Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the UK's parliamentary Brexit debate, which will be held this week, with the vote itself taking place on January the 15th. Where we go from there and the potential trading opportunities that will continue to appear as a result of the Brexit issue. My name is Sasha and I'm a financial analyst from the research department at 4Trade. If you have any questions, I'll do my best to answer, or please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here is an example of a market opportunity. You can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches the level that you can see on the screen here, 1.2840, this shows the right moment in our estimation to come in and open a trading position, had you decided to trade on this market opportunity when it was active. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit. And on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. And if the price is going against you, then you could potentially have a loss of this amount shown at resistance 1, 2 and 3, which is in red. The pivot point is the starting price based on which resistance and support levels are calculated. The support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So let's briefly go over Brexit. In 2016, on June the 23rd, the UK held a rather bitter and decisive referendum which was expected to produce a narrow majority in favour of remaining in the EU. The leaderships of all three main political parties supported EU membership. However, almost 52% of the country voted to leave the European Union, while just over 48% voted to remain. Since then, the Conservative government, propped up by Northern Ireland's Democratic Unionist Party, has been negotiating with the EU, while the Conservative Party itself is divided on the issue. Those that want a clean break from the EU with no trade agreement are referred to as hard Brexiteers, and those that want to continue some kind of customs agreement or deal with the EU are supporters of a soft Brexit. There is a third group that is gathering some political momentum, who are pushing for another referendum that want to remain in the European Union. This division across towns, the country and political parties, and the diplomatic battle with the European Union has caused numerous trading opportunities, which has seen huge changes in the value of the British pound. Investors believe that the likely outcome of a no-deal Brexit, which supporters of a hard Brexit see as no bad thing, in the short term would cause the pound to crash. and for British and some continental European stocks to fall. So let's take a look at the reaction of the currency market to Brexit. As many economists predicted, the markets would not be kind to the British pound in the event of a vote for Brexit. On 23rd of June 2016, the day of the result, the GBP USD currency pair collapsed by more than 11%. Similar losses were recorded against multiple currencies on that day. Since then, the pound has been highly volatile, being far more affected by the Brexit issue than any other, including interest rate movements. Although when the two factors combine, pound currency pairs can move sharply. I'll give a brief account of political developments of Brexit which have affected the markets, causing great movements in the pound, and then a bit about what will happen and what might happen in the future. On this timeline you can see before you, we can see what I showed you a moment ago, with the pound crashing over 11% after Brexit and then stagnating. The pound rose when elections were announced in 2017 over optimism that there would be a more unified government position on Brexit. However, elections were no help since Theresa May's Conservatives won but lost their majority in Parliament, so the pound didn't recover so much as stabilise. In September 2017, the first step towards Brexit, the repeal bill, was passed, and you can see the pound grew in value against the dollar. In December 2017, the EU moved to the second phase of negotiations after the EU agreed on the Brexit divorce bill. The pound grew to its highest level since the referendum result. In March 2018, the UK and the EU made further progress, causing the pound to climb further. But on April the 18th, Prime Minister May suffered an important defeat in the House of Lords, which sent sterling downward until recently when optimism over a deal gained some momentum. There are a number of points that the Conservative Party rebels are unhappy about. Hard Brexiters say her deal doesn't deliver what the referendum vote sought. They say her deal would leave the UK subject to EU rules, but without any say about those rules. The backstop is the solution offered to the Northern Ireland issue. Northern Ireland is part of the UK and will leave the EU, but shares a border with the Republic of Ireland, which will stay in the EU. The EU has border posts with non-EU countries, and Ireland has a troubled political history which involves years of killings and terrorist attacks by paramilitaries. The building of border posts runs the risk of reawakening national tensions, and some fear the return of the paramilitaries and terrorism. The backstop is an insurance policy to ensure there is no hard border, even if no formal deal is reached on trade and security. No border checks would effectively mean that Northern Ireland would stay in the EU customs union. This is the problem facing the UK, the EU, and the island of Ireland. On December the 4th, the senior advisor to the European Court of Justice outlined that the UK can unilaterally abandon the Article 50 process. The court endorsed this opinion on December the 10th, which effectively means that the process of leaving the European Union could be reversed, legally speaking, without EU approval. This would be much smoother than the UK government and Brexit campaigners have claimed. Good news for those hoping to reverse Brexit, but for now this is still an unlikely scenario. Still, the pound liked the news and jumped by 0.80% against the dollar, close to a weekly high upon the news. Any events reported that suggest that the UK may not leave the EU or that a soft Brexit will take place tends to support the pound. News suggesting a no-deal Brexit outcome tends to drive the value of the pound down. The highly awaited Brexit withdrawal vote on the deal that Prime Minister May brought back from Brussels was expected to be held on December the 11th. But instead, on December the 10th, Bloomberg and the BBC reported that Prime Minister May would make a statement to the House and delay the vote. You can see how the currency markets reacted here. On the right-hand side of the screen, it's clear that the pound sank to its lowest level against the dollar since April 2017. The Prime Minister outlined how a vote would take place at a later date and that she would attempt to again get more assurances from the EU on the backstop and hopefully persuade the EU to compromise in other areas. Since then, Prime Minister May's own Conservative Party MPs initiated a vote of no confidence in her. But although damaged, the Prime Minister survived. Parliament is due to vote on the Brexit deal on January the 15th, although it still looks unlikely that May's plan will receive enough support to get past Parliament. Latest reports suggest that a deal between the EU and the UK is being made to delay Brexit until the situation is resolved. The UK is currently due to leave the EU on March the 29th. It seems unlikely that Parliament will vote for a deal before then. In the meantime, the uncertainty is damaging UK businesses and the economy and continues to put pressure on the pound. All options are still on the table. The Prime Minister could potentially resign if her deal is not accepted, triggering a leadership election in the Conservative Party, and the winner would become Prime Minister. A no-confidence vote could be held in May's government, and if it's lost, there would be a general election. If May's plan fails, a referendum vote could also be tabled either by the government or by opposition parties in Parliament. In all cases, volatility is expected, and there will be plenty of opportunities to trade the pound over the next few months. Of course, we at 4Trade will be following any developments that affect the markets very closely, so please do get in touch with the Senior Account Manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until then, goodbye, and please join us again at 4Trade soon.